I think the old location holds true today. But one of the keys that we look for is making sure that we're placing our investors within subdivisions, within master plan communities where we know there's a great track record. That track record can come from a developer that has a great history of providing excellent developments that are master plan communities where we know all of the services will be provided as that estate matures. Transport orientation is becoming a bigger factor. We're also mindful of understanding historically where there are low growth areas within, say, metropolitan Perth, and that we're not placing our investors in those sort of risk areas. So that's really critical that we get that right.
Yeah, I think the other thing to think about is property investment is not speculation, it's investment. So you need to be thinking 5-7 years, 7 years preferably. So therefore, if you think that time horizon, there's some really good investments to get involved in, and often they occur in greenfield, new subdivision areas. You perhaps don't want to be the first person to buy a block in an estate. Conversely, we don't advise our investors to be the last person to buy a block in an estate, because then you're paying for all the infrastructure that's already gone in. Our suggestion is to look at subdivisions, and certainly our property investment specialists have researched this, but look at subdivisions that have probably got 1 or 2 years worth of sales left in them, and that's a great time to get involved, because then the infrastructure is generally there, so you can easily find a tenant. But land scarcity is going to start to dry up, and so you get that appreciation in your capital gain a lot earlier in your 7-year cycle than you may have if you've got in too early or got in too late.
I think also too, in addition to location, I think time, and Pete touched on time, I think time is a big factor in a real estate investment. If you've got an impatient investor who just thinks that they can purchase a property, on-sell it and make a quick buck, I think, those days are very few and far between. You get those little peaks in the market, but generally, an investor needs to be patient and understand that they need to run through a cycle, and, time, in addition to good location, really takes care of most investments and turns them into very good investments.
And the other thing to do is broaden your horizon. Most of us have been brought up to think that I need to invest within 5 or 10 kilometres from where I currently live. And majority of people who are starting to think property investment have generally built up quite a reasonable asset base. And 5 to 10 kilometres from where they live is actually probably a bit too expensive to go out and be a mainstream property investor. We probably encourage, they come in thinking that, but they probably go away ultimately buying something 20 to 25 kilometres from where they currently live. I mean, there's absolutely nothing wrong with getting to know the marketplace with which you're going to invest in. We highly encourage that as well. But broadening your horizon can actually lead you to better investment outcomes.
And it provides that spread. Potentially, if it's close to home, you may be able to only afford one investment opportunity. You go a little bit further, you can have 2 investments potentially, and geographically spread that risk or spread that investment as well.